software solutions for fishing and hunting, CRM software for electricity and gas suppliers, business management solutions for builders and project developers, and software solutions for managing fire brigades. I mean, how many companies are going to bother to go after the fire brigade
Yeah,
software solution
yeah.
market? So that means that these companies, because they serve such a small niche, have unreal retention, really sticky products, and huge switching costs. Pieter threw some stats out at Investicon. He said 98% of all customers stay every single year. He said there were roughly 20 businesses out of the 46 in their portfolio that tripled their prices, and the retention rate was 100%. Emmet, how are we getting on?
Hey, Mike, how are you today?
I'm good. I'm good. I kind of in the aftermath of Investicon, I always get a very positive. I'm not sure what the exact feeling is, but just being in the room with the kind of community of investors, especially in Ireland, where it's very much a niche
Mm,
subject, always
yeah,
kind of gives
that's
me
right.
a very positive kick on kind of what we're doing here. So it's great.
Yeah.
So yeah, sorry, we're recording this. This is why we missed last week. Essentially, is because I think it might be the first podcast we missed in a good while. Because we did Investicon last week in the Irish Stock Exchange on Thursday, August 21st, and roaring success, I have to say.
Ah, yes, we saw people fly and drive from near and far to spend a half a day with us and our guest speakers on the really very historic trading floor of the Irish Stock Exchange, which is a magnificent building in its own right. I think did we say it was 1760 or something it was opened? I saw that on the wall.
Oh Jesus, I don't know.
I
I
think it
thought
was
it was
1760.
1879. The block on the wall was from 1879, but that doesn't
Oh,
mean
right. Okay.
that doesn't mean it was when it started though.
For sure. I mean, Julia, one of our members, flew in from the Bay Area of San Francisco for the half day. So thank you, Julia. And Trent flew in from Seattle for the event, which was absolutely incredible. And on stage, as our listeners know, because we've interviewed most of them here in Stock Club on the run up, we had Lois Cox, and she is the former chief investment officer of Kansas State University Foundation. We had Eric Bleeker, who was and is the founder of 24/7 Investing and is a bit of an AI genius, really. And we'll talk about that on this show. We spoke with Anthony Sheehy, who's the founder of IrishWhiskeyAuctions.ie, and Mark McLaughlin from the Dead Rabbit, which you probably remember from your New York days. Do you, Mike?
Yeah, it was famously. I don't know when it won it, but it won best bar of the year, like
Yeah.
best bar of the year in the world,
Yes.
which is a big ticket item for a while. I remember that.
Mark probably served me when I was going to and from New York because I was a regular at the Dead Rabbit. We also had Pieter Slegers, who's the founder of Compounding Quality, which is Substack's #1 investment newsletter. And we also had Tim Cohn, who is the vice president and senior wealth consultant at Charles Schwab. And he's a former NFL player, huge, big block of a gentleman who gave us really interesting stories, not only about managing vast sums of money, but his time in the Oakland Raiders and the Denver Broncos and so on. And of course, there was you and yours truly, Mike. So the two of us were on stage. So on the day, our panel of experts, by my count, pinpointed 14 stocks for potential massive returns. In fact, there was 15, but one was mentioned twice, which is like a double blessing of sorts. And then there were 4 very collectible whiskey bottles that were mentioned by Anthony that appeared to me to be sure certs. I mean, I really wanted to just invest in them. And if you add in the macro themes that excited Tim and Lois, there was probably about 22 or so actionable ideas. So last evening, you and I thought it would be fun to pick one new idea that we heard at Investicon, something that's new to us. Now, you said something back to me. I don't think the one you're going to talk about is new to you because I heard you mention it before. But from that day, you and I were fed a lot of great ideas. And I think we shouldn't do our absolute favorite for obvious reasons. A lot of people paid a lot of money to be there. But let's pitch one of our favorites to each other on this show. And I'm actually going to nick my favorite from Eric, the AI soothsayer. And I'm also going to pitch it in Horizon. and I'll probably even buy it. It's a face melter. So actually, sorry, I'm going to pitch my favorite from Eric in Horizon. Now, listen up, folks. If you want a full debrief from the event, it's not too late. Email pod@mywallstreet.com and we will send you a very special offer for Horizon that's too good to pass up. So you get Horizon for a year. You'll get the Investicon summary with the 22 odd investment ideas and themes. And you will, as ever, have first access and favorable, very, very, very favorable rates on future events that we do. People who were Horizon, our Horizon members, were allowed to attend Investicon this year for €1, as opposed to €459, which is what the majority paid. Okay, so pod@mywallstreet.com. So let's kick off, Mike. Which idea, which stock pitch got you excited? Who made it? And tell us all about it.
Yeah, I had a different level of excitement than other people for this one, and I think it's because it's a stock I already owned, and it's
Oh,
very small business, a small business, and it's just that kind of validation, I suppose. Do you know when you hear?
yeah.
So sorry, I should give some context. It was Pieter Slegers who recommended the stock. The stock's called the Chapters Group. I might have done
Oh,
a very quick pitch on this stock on the pod before. I can't remember exactly, but it has been a charging and fearless stock of the past. And yeah, it's that kind of reassurance, maybe. You're hearing
mm,
someone of the kind of expertise of Pieter wax lyrical about a stock you already own or about a stock you've gone and done the research for. But because of a stock like this, where there isn't a lot of work done on it, there isn't a lot of analyst coverage, there isn't a lot of people talking about it, you're kind of, I wouldn't say not sure, but it's not like, oh, that's the Amazon or Google I own in my portfolio. Do you know what I mean? There's still question
mm,
marks, and you
mm,
would need some kind of feedback from the stock itself. Do you know what I mean? So I've only owned it for 3 or 4 months. We've seen, I don't even think we've seen a earnings report in that time period. Um, so it was there. It's not a huge position for me, but it's one I intend to build on if it goes well. If I'm more and more confident in it. And so the stock is called the Chapters Group. What I loved about the pitch as well is that Pieter actually went and got real on the ground insights from this. So Pieter attended the Capital Markets Day back in July, so a couple of months ago, where he spent a couple of hours with the CEO and really got the insights you can't read on the internet for stocks like this. So it's great. We'll get into all of it, but let's just give a bit of backstory about the Chapters Group. So the Chapters Group is a German stock, trades on the Frankfurt Exchange under the ticker CHG. And say that if anybody's all the people I met at the event were talking to me about these same kind of stocks, and I love these kind of stocks. So it's a holding company. It owns and operates 46 diversified businesses across a number of industries. It specializes in vertical software providers. So it'll pick a niche across kind of any industry really, but it makes sure that it's incredibly critical software for that niche. So we all know about Constellation Software at this stage, maybe one of the best assets you could have owned over the last 25 years. Mark Leonard, he's CEO. He'll go down as one of the greatest capital allocators of all time, one of them, anyways. So Chapters Group is made up of ex Constellation Software guys. The CEO Jan Moore is ex Constellation, along with 3 or 4 of his top brass, I think. And literally, what they're trying to do is just copy and paste the same strategy as Constellation. So vertical market software is very critical software for very specific niches. And I took a few examples out of Chapter Group's investor relations page, the subsidiaries it owns. It's just to show how niche it is, and how this kind of strategy works. So software solutions for fishing and hunting, CRM software for electricity and gas suppliers, business management solutions for builders and project developers, and software solutions for managing fire brigades. I mean, how many companies are going to bother to go after the fire brigade
yeah.
software solution
Yeah.
market? So that means that these companies, because they serve such a small niche, have unreal retention, really sticky products, and huge switching costs. Peter threw some stats out at Investicon. He said 98% of all customers stay every single year. He said there were roughly 20 businesses out of the 46 in their portfolio that tripled their prices, and the retention rate was 100%. So that's the kind of traits these businesses have, and why Constellation is so successful, and why I hope that Chapter Groups has every chance of following in its footsteps. Because if you were, we'll zero in on that Fire Brigade software solution company. Do you know what I mean? There are, we'll say, 200 fire brigades across Europe. It's not like they
Mm.
have much of a choice. Do you know what I
Yeah.
mean? There isn't firebrigades.ai just popping up being like, yeah, this is the market we want to go after, and this is where
Yeah.
we're going to spend all our money and all our marketing dollars and everything else.
And you'd never think of it. I mean, as an entrepreneur, you sit down and evaluate opportunities, and like software for fire brigades, you'd really want to have had an insight and organically grow from the first kind of fortunate customer, if you know what I mean.
100%. I think, is it a niche moat?
Yes.
What's the economic moat? I should know this. Um,
So should I, but I just know it's a niche mode. I know it's probably about time.
sorry,
But
no, this is terrible podcasting because
it's
I'm
time to
actually
go.
googling it.
In the meantime, folks, let me tell you about the cool and refreshing properties of Mountain Dew.
Efficient scale. That's what it is. So essentially, the market is only big enough for one company to be profitable
Yeah.
in that market. And so
Mm.
there's no point in, if I'm Michael O'Mahony .com and I have the market cornered of fire brigades. There's no point in Emmet Savage going and spending a bunch of money to come in, undercut me, and then not make a profit. And then instead of one profitable company, there's two unprofitable companies, and it just goes up in flames. So that's
Mm.
essentially what a lot of these companies are doing, and what's feeding this engine, we'll say, like a Constellation Software is tens of thousands of companies. Chapter Groups is just 45. But you see the runway there, and you see the strategy that works. So that's very clear. Like, it's got a proven business model. It's got the stats that back it up. It's got the right people in place. And I want to go into that a bit now as well. And the inside information I think Pieter picked up and what he shared with us at Investicon. Um, so Pieter drove from Belgium to Hamburg in July to attend Chapter's Capital Markets Day. And then I think there wasn't very many analysts at that, so he ended up getting invited to dinner with them, and he got to spend he said 90 minutes to 2 hours with the CEO, Jan Moore, and the feedback was incredibly positive. So I think his quote was, as long as Jan Moore is in the picture, and he's only 36,
Mm.
uh, then us investors are going to do all right. And that's
Mm.
that's what I love about these businesses. And I was talking to someone about this exact thing. It wasn't about Chapters Group, but because the CEO isn't running the operations of the business, the CEO is solely focused on capital allocation, finding the best investment opportunities, and then looking to achieve ROI on them. It's kind of doing our job first. Do you know what I mean? You can be a bit more hands off with a stock like this compared to, say, with Facebook. And Zuckerberg can go off and blow 20 billion quid on the metaverse because of his, you know, an inkling he has. And he can be completely wrong. And the stock absolutely tanked. Look, it's recovered since. But, we see that. But Facebook is the best example because Zuckerberg has so much control over that company in the hands of one person. But he's not going out and deciding, okay, well, look, if I can get a 10% return on this acquisition over X, Y, and Z, and it brings this amount of synergies. No, he's going out and being like, AI is going to change the world, and I am going to spend as much money as possible so Facebook doesn't lose its position as the number one advertising platform, X, Y, and Z. And I just think there's distinctions there that are important because as an investor, it comes down to the numbers. Do you know what I mean? Like paying some flute 250 million quid a year who's 25 and just out of college, there's not going to be a high ROI on that. But
Mm.
Zuckerberg is steadfast in his decision that this is right for Facebook, the business. And look, Facebook has, done incredibly well under Zuckerberg's tutelage and his leadership. So that's fine. You can have trust in him. But for a business like this, it's just, oh yeah, there's a good investment. There's a good investor in charge. He's going to make good investments for the company, and that's all I have to worry about. He's proven he's done it 45 times before this. I am very confident he'll do it 45 times in the next whatever 5, 6, 7 years, and just let it run. Do you know what I mean? And it's what we see with Warren Buffett. Warren Buffett wasn't there underwriting Geico's insurance claims and getting
Yeah.
involved in loss ratio or whatever else. No, all he did was spend money wisely, and he's obviously the perfect example, and what everyone goes to, and unfortunately, probably what a lot of people compare themselves to in these kind of capital allocator CEO positions. But if you're proven to be a good investor in that, I think it's very easy company for investors to hold. Do you know what I mean?
Yeah, I do. I had a look at the annual report when I got home from Investicon, and I did notice that the CEO and I presume his co-founder or the other guy on the front cover were so young, which is what happens when you're going grey and you're 50. Everyone looks younger. But um, the one thing you said there that strikes me as the principal risk is you said something to the effect of they've acquired 45 companies to this point and you have a high degree of certainty they'll acquire another 45 in the years ahead. Yeah, I did quote you right, didn't I, Mike?
Pretty much.
Yeah, well, it's that. I mean, obviously, that's the magic, that's the formula, that's what they're out to do. But it seems that the competitive marketplace for serial acquirers to my eye, appears to be growing, or else I've only grown into a phase of my investing life where I'm spotting them and seeing them and looking at them. Maybe they've always been as out there, as they are today. So, like the ability for them to go out and find other businesses that suit their portfolio, I think it's probably getting to be a little more competitive. But what I suppose uh, is their barrier of sorts is the niche, the specific niches that they're looking for and that they're seeking companies in. And the bigger they get, the better deals they'll get, which we know from giants like from Berkshire Hathaway, when they walk in and offer a price, they don't move a cent, right through to Constellation Software, who on multiple conference calls have said that their brand and scale has allowed them to get the best deal possible.
No, I think that's true, and it's the top of the risk kind of factors for any business like this is, can they continue to get good deals? Can they continue to
Yeah.
execute on this strategy? I think there, I think it was this correct. Peter was saying the kind of general target is a EV to EBITDA of around sixfold was
Yeah.
their general
Interesting.
valuation targets. Do you
Yeah.
know what I mean? So
Yeah.
that's a decent litmus test of if they continue to get deals done around that level. You know,
Yeah. Yeah.
that kind of tells tells a story about the competitive pressures, because there's another company we love in Topicus that is doing something very similar, and I know it's distinct in that it's going after a lot of government software and public work software and stuff instead, but it's definitely swimming in the same seas. And you know, as we said already, this we know the strategy works. So what's stopping a new competitor coming in and being like,
Mm,
well, I can make this work at 6.5 times EV to EBITDA or 7 times EV to EBITDA, and that immediately brings in new competitive pressures to the market. It's
yeah.
completely true, and it would be one concern. But again, it's worked so far, and it
It
wouldn't,
has. Yeah.
it
Yeah.
wouldn't. It's the same, like as in these companies, they'll all have integration risks as well. Do you
Of
know what
course.
I mean? It wouldn't stop me from buying more at the minute unless that proves to play out over the next 2, 3, 4, 5 years.
I think
And
it's actually quite a negligible risk. I mean, every business has a risk and every business has a long list of risks. And if you were to get put off a business's opportunity exclusively for its risk every time, well, then you shouldn't invest at all. But what strikes me is that if that risk plays out, the way it manifests is just fewer deals or deals happening a little more slowly. It's not like the business grinds to a halt. So if you take a pharmaceutical, the principal risk might be that their patent protected drug is going to run out at X date in time, and that's a very distinct cliff edge in the future. But with this, we won't actually see the real crystallized outcome of that risk. We'll just see a deal happened today where, in fact, it could have happened a year ago, but the only people who know that are the ones inside chapters. It's just a slower deal. I did notice that it's about $1 billion in market cap. Or sorry, euro. It's a billion, 950 million euro in market cap. So it's still a lovely size. But the downside for a lot of our listeners will be a broker that allows them to access. Is it? I know it's a Hamburg-based company, but which are
It's
they
on
in the
the
Berlin?
it's on the Frankfurt Exchange.
Frankfurt Exchange, yeah. So a lot of kind of everyday brokers, fast casual brokers, if you like, will not make it easy to buy that share. Won't allow you to do it. So you need a bit more of a grown up brokerage. Who did you use to buy chapters, Mike?
That's on Revolut.
Oh, it's on Revolut.
Revolut has pretty good coverage of European stocks. Doesn't it doesn't cover a lot of. I know it doesn't cover Canadian or Japanese. I'm not sure about Australian, but in Europe, for reasonably sized companies, Revolut has pretty good coverage. So,
Well, scratch all that.
well, yes and no, because
That's
we're going
pretty
to have
good. I mean, that's great.
yeah.
$1 billion Frankfurt-based business. That €1 billion. That's very impressive. It's been nothing but going up. I presume even in the 3 months since you bought, you're in the green.
Oh, I'm in the green. All right, yeah. It's
Well
had
done.
the last couple of weeks a little downturn, but it's okay.
Yeah.
But yeah, no, it's great. It's great to hear someone of Peter's stature in the investing circles talk about a stock you already own so highly. It's that
Well, your stature
validation.
is just as great, Mike. Don't mistake that, because he researched it. You researched it and bought it. So
Yeah.
it's like the full Irish breakfast. The chicken helps, but the pig really was invested in it. You know.
That's a good one.
Fried egg and a sausage. You know, the whole farmyard played their bit, but the pig really went there and knew the same.
Right.
Like you're the same. You bought shares.
That was Chapters Group on that lovely
And that
analogy.
lovely farmyard / breakfast analogy. What a segue. What an absolutely irrelevant segue.
No, it's good. It's good. When my outlet had a good one for me there recently. It's the first time I heard it. You probably heard it loads of times, but it's what is it? Oh yeah, if you got a name for waking up early, you can sleep in bed all day. Yeah.
Oh,
all right. What do
right.
you got? You're going
Well,
down the
Mike,
AI route.
I'm going the AI route, and kind of in a slightly related tone, our business, My Wall Street, is going to invest very heavily in profit in the next year. And apart from, I believe it is already the greatest 5 minute a month formulaic investment product of all time. It just needs that value needs to pop into people's lives, because people forget or don't take the advice we send. But all I can say to our listeners is, grab it today while it remains $29 a month. Just go to useprofit.com and you can put / My Wall Street offer at the end of that domain if you want one of about a dozen 3-month free trials. So I suppose, just trust me, folks. Give Profit a free trial, because we're doing something special there. And the more I mature and the more My Wall Street matures, the more I'm certain that we've got ourselves a very special, unique blue ocean based strategy product that you are going to want in the AI world. And I spent some time talking to Eric Bleeker about Profit and how we've deployed AI. And as a certified expert in AI, as somebody who was buying NVIDIA stock 10 years ago, he was in agreement with the presumptions and the facts that I had on the table about profit. So, okay, so I'm going to talk about one of Eric's stock pitches. You just did one of Pieter Slegers, and Eric spoke about AI under 3 themes. I think he gave at least 9 stock recommendations. Is that right? He gave 3 under 3 categories.
Bunch. It's not far off if it isn't.
Yeah. Well, one of the three areas that he was speaking about was robotics and automation. And one of the companies that he pitched is definitely a riskier play in LIDAR sensors. And it's called Ouster, Ouster, and its ticker is OUST. And it has really strong growth targets, like 30 to 50% a year for the years ahead. And it basically produces applications across vehicles, industrials, and potentially humanoid robots, which are space age until you see them arrive. I mean, there's no one in this listening to this podcast who enjoys taking out the rubbish or the trash, the garbage. No one wants to do that. No one enjoys emptying their dishwasher. No one enjoys those menial tasks. But when there's a fleet of robots that for $6,000 does it for you, it's something you would consider. So Ouster is in their words the physical AI company powering the LIDAR revolution. Now, you might have spoken about LIDAR in the past and why it matters. And when we've spoken about Tesla versus Waymo, you've explained that tech. But I'm just going to give a recap to our listeners on what is LIDAR. Everyone knows of radar. What does radar stand for, Mike? Can you remember?
No, not a clue.
Me neither. Can't remember. So that was pretty good. But
But it
LIDAR,
is. But it is an acronym.
it is, yeah, because LIDAR is light detection and ranging. So it's a sensing technology that uses laser pulses to measure distance with extreme precision. I think most of us who've watched David Attenborough have at some stage in life heard or seen about bats. They send out a super high pitch squeak and they see the inside of a cave wall in the pitch dark because of the sound that comes back. Well, this is an analogous technology using laser pulses to measure distances. And I know what laser stands for: light amplification by stimulated emission of radiation. So total nerdy, but so it emits millions. So this LIDAR tech it emits millions of beams of light per second and measures the reflections. And basically what happens in the mind of the machine is a 3D map of the environment. So you can see why that's such an important tech with self-driving cars, or anything else that's basically going to start to map the environment in which something is interacting. So if you think of it, it's basically vision for machines. How do machines see? Well, very often the tech uses LIDAR, and it uses just total fractions of a centimeter. It should have a word, probably millimeter. Probably, yeah, they should invent a word called millimeter accuracy. Day or night, and rain or fog or glare or whatever. And there's a whole bunch of applications that are proliferating as a consequence of this technology, like, as I said, autonomous vehicles, robotics and industrial automation. So like in factories, parts that are being moved by robotic arms, where seeing machines are a thing, and in warehouses. And then there's smart infrastructure, such as like traffic monitoring. You can imagine city councils, the need for them to monitor traffic and pedestrian
Yeah.
safety. And crowds, pop-up crowds happen everywhere across the world all the time. Perimeter security, all types of mapping and surveying, construction, agriculture. And the more you think about this tech, you could sit down with a pencil and after 10 minutes come up with 20 applications for seeing machines that wouldn't have occurred to you unless you had sat down. So LIDAR is really moving from an experimental technology, which in fact, when you explained the tech to me and our listeners at first, at least a year and a half ago, it was, in my mind, it was quite new. It clearly wasn't if you worked in the LIDAR companies. It's been in development for quite a number of years, but it's certainly no longer an experimental technology. It's an essential technology. So
Yeah.
as a result of,
And I think the success of Waymo
yeah,
is kind of a validation of that in a sense,
no
because
question of doubt about it.
we're seeing it roll out successfully in more and more cities across the US. And
Yeah,
very much it is like the kind of, you see it on top of any Waymo now. It's the spinning kind of hat, we'll call it.
yeah, yeah,
Um, but that is powering the autonomous vehicles in everywhere except Tesla, and then
yeah.
showcasing, I suppose, the efficacy of it elevates a company like Ouster now as well, and that they specialize in this technology that people see working with their two eyes instead of hearing about it.
Yeah, and I know that Tesla is advantage is that the camera method they're using is apparently a factor cheaper, like
Exactly.
1/20th the cost.
Scale
But
the scalability of everything, I think,
the
is the test.
scalability of
Yeah.
it. Exactly. But nonetheless, the LIDAR market is projected to grow by about 20% compounded all the way through till 2030. So the analysts out there are saying that it's something between a 15 to $20 billion in annual revenue market. So it's not bad as a starting point for Ouster, who now are positioned uh, with the full stack. So let me explain. So the business was founded in 2015. It's only 10 years old. And it's one of the few companies with not only the tech, but also the manufacturing and commercial traction to lead the shift, or us fumbling over the strategic advantage earlier of small niche businesses. Well, its strategic advantage is the first mover advantage, which we all know is time limited. And the company has transformed from what was once a pure hardware maker into what it is calling a physical AI company, which is interesting because for most of us, AI is just this thing in the cloud. You interact with a machine that's somewhere else, but they are the physical AI company. So they're pairing these industry leading LIDAR sensors with their own proprietary software that turns the data into something that you can use, actionable intelligence. So in the most recent quarter, Q2 2025, revenue for Ouster was up from the floor. I mean, it's really the earliest days. When you look at its 5-year revenue, well, revenue only switched on 2 years ago and it was negligible. It was, I think it was like 2 million or something. So basically, revenue for the quarter of Q2 was $35 million, which was 30% up year on year. They shipped about 5,500 of their sensors, which was up about 1/3 year on year for the quarter. And they had a 45% gross margin, or 50% non-GAAP margin, which was again up from last year, up about 40% from last year, which says that the business is getting more efficient at building and shipping and selling the stuff that it does. So it has a bunch of cash in the bank, about $230 million cash in the bank. It has no debt, so therefore has a really strong balance sheet. Maybe the strongest balance sheet in the LiDAR industry, because you think of early stage businesses such as this, they very often need to fuel with levels of debt. Well, this business is debt free and has a whole bunch of cash, and it has beaten its own guidance for 10 quarters in a row.
Yeah.
So
I'm just
when,
looking at the long term stock chart here. It went public back in 2020 at
yeah,
$97 a share. So I imagine it had and it's at trading at $30 a share now.
yeah, and it
Uh,
went as high as 160, $161 a
exactly.
share.
Yeah. So it was valued as much as it's maybe over 10 billion. My maths is
Yeah,
maybe shaky on that.
no, I think you're
Uh,
right.
for a pre-revenue company. So it
Yeah,
shows you're talking about the balance sheet there. I imagine it did very well off that IPO and is kind of had an idea in between, but
that's correct.
always kind of financially at least secure the business from that.
Yeah. Um, well said. So its market cap right now is about $1.7 billion, and you're right, it's soared above $10 billion way back when. Well, when I say way back when, let me have a look. It was only about two years,
End of
3 years ago.
2020.
Oh yeah, sorry. So it's barely out the trap, and it just went. It started high, went higher, and it's fallen all the way back, and we're at 30, about $30 a share. Is it? I don't have it open here.
About
Yeah,
30
it's about
bucks a share.
30 bucks a share.
That's
Yeah.
up from $10 a share last year as well. So
Well, that's right.
volatile to say the least.
Yeah, and looking at historic share prices, it's always fun but somewhat demoralizing to drop your finger on a
Oh,
touchscreen at the
100%.
lowest point to go,
Yeah.
oh, this share. I
Imagine if I
know.
just went back and bought it at $3 a share. I'd be genius right now.
And there's no stock on earth where if you look at its max share price graph, you can find a low point where you should have done something. But
Yeah.
the opportunity is well, what you might want to do now is consider Ouster, because it has a vast opportunity. It has smart infrastructure, and the company itself estimates that there's a total addressable market of about $19 billion for LiDAR enabled infrastructure. That's like traffic lights, highways, and safe cities systems, connected smart cities, which all cities are moving towards. So products like Ouster Gemini and Blue City are already out there, sold in the network, powering intelligent systems and crowd analytics and perimeter monitoring. Then there's so that's the first one, smart infrastructure. Then the next area that they've got a product for is robotics and logistics. And again, most people have seen some piece on TV, the inside of a giant e-commerce warehouse, whether it's Amazon or something smaller. But the logistics and the technology inside those places is absolutely mind-blowing if you've never seen it. So, an old-fashioned view of the Amazon warehouse might be a whole bunch of people walking around with a shopping basket, when in fact, when you look inside an Amazon warehouse, it's hundreds or thousands of robots on rails going, collecting, packaging, and automating the dispatch, as it is for so many other big businesses, from Mercado Libre to your local place, maybe HelloFresh. This area is growing. We all know e-commerce is getting bigger. Warehouses increasingly rely on these autonomous robots, and LIDAR offers this unmatched precision in these crowded environments with humans and machines and products all kind of interacting on a non-stop basis. Then the third area that Ouster have a product and a solution is automotive ADAS, or advanced driver assistance systems. In other words, keeping in lane, blind spot detection, collision avoidance. My sense on that is that I'm not sure they'll make the headway that they would like into that area, because so many manufacturers have spent their entire technical lives figuring it themselves. And but they say there's a major upside catalyst for the business as this moves from niche premium cars into mainstream vehicles, that every vehicle eventually will, the entry level €10,000 car will have advanced driver assistance systems. And then the fourth and final area where they see a revenue opportunity is security and defense and border protection and critical infrastructure and commercial facilities that require LIDAR. So there's plenty of blue ocean. Like, this is not a everyday tech. This is an everyday tech that is being rolled out at the moment. It's not everywhere at this time, but there is a giant opportunity. And Ouster has an amazing roadmap, custom silicon chips. They have firmware upgrades and software platforms like Gemini, the one I mentioned, which is their analytics software, and Blue City, which is the other one I mentioned for smart cities, and they've developer tools. So when you think about the textbook example of an ecosystem that everyone knows and understands is Apple. They built the iPhone and opened it up for people to use. Or maybe a more niche example might be the Raspberry Pi. But what they've done is they have developer tools, and they've created the hardware for individuals and businesses to do whatever it is they need to do. So this combination of the hardware and the software is critical. So sensors are really just a race to the floor. Like, there's no question about it. Anything that's a technical product that's going to be everywhere is effectively a commodity that is just going to... If you think of anyone who's bought a camera for their home, I want a 4K camera, and Nest is a brand, but if you go online, there are so many technically superior products at a cheaper price point because they don't have a brand. But the point is that LiDAR sensors, they're going to be they're already on the way to everywhere. But the real thing is, when you pair them with software and then overlay AI, you find you've got a really nice business model with recurring revenue and higher margins. So that's Ouster. I mean, they are a earlier stage in the technology life cycle of life, or of life cycles. The life of LiDAR is still in its early stages. And of course, like everything, just like chapters risk we discussed, where they might not have 24 or 45, whatever we said, acquisitions in the years ahead. Like Ouster has its own risks. I would think the market adoption and uptake in automotive might be lower than they expect, as I said. And I think there's an awful lot of competitors chasing the same opportunity. And when that happens, a price war occurs. which nobody really wants. You don't have built this beautiful thing and find your margins are getting compressed because this giant other business over there. Like, what's to say that Apple purveyors of AirTags don't have the LIDAR equivalent for whatever it is you need? So there are seen competitors and there's potential giants who could move in and crush them overnight. But nonetheless, I still think it has a potential to be a multi-bagger, and so does Eric. Eric pitched this to us as it's the highest risk, highest reward stock. That always makes my ears prick up. So, yeah, 19 billion TAM. It already is exhibiting great growth. And as I said, 10 quarters in a row, smashing analysts' expectations. The margins are improving. The balance sheet is strong. And all in all, I think we are looking at a relatively small player, but not so small that it's feeble. We're looking at a $1.7 billion business that has a brand that's known if you're in this space or if you're looking for something in this space. And Eric said to me that he could see a path to a 10 billion valuation in the next decade. I don't think he said that on stage. We were chatting afterwards, and I said I want more on this. So I'm very interested in it, and I look for 100 baggers, but you don't know if you found one until 25 years later, so you don't even remember what you were looking for back then. So could it be a 100 bagger? I don't know, but could it be a 10 bagger? I certainly think it's one to consider, and it's one that I'm very interested in.
Very good. Okay, Ouster, ticker OUST. That's it for the show, Emmet. Just two stocks. We won't be giving away much else around Investicon, but just thank you if there are any listeners. I know there are that were in attendance. I just wanted to give a big thank you because it was a great day and we really, really enjoyed having you there. Really, really enjoyed the chats after, the chats during, the actual speakers, of course. So yeah, that's it. I think just a big thank you to everyone involved, the organizers as well, Luke, JT, Anne Marie. Even your son and his mate were doing the
Yeah,
doors, the least
yeah.
intimidating bouncers I've ever seen.
Cheap labor, but not that cheap. Actually, to be honest, when I ended up between tickets for the match and cash for the day, but couldn't have asked for two better. But the whole team were brilliant. And don't forget, folks, pod at mywallstreet.com for a very special deal where we can send you the 22 or so stocks or investable items that we're discussing in Investicon, plus a year of Horizon, and also sign up for profit. You will be sorry when we do the stuff we're going to do if you missed it.
Brilliant. Okay, Emmet, thank you very much for joining me this week, and thank you everyone for listening. We'll talk to you next week.